Hello everyone, welcome to this channel. My name is Ruben and today we're going to talk about Marathon Digital Holdings. We will talk about 8 things in this video. We will start with capital market summary and then do a deep dive in this company. Capital market summary: at the day of the recording, the stock is trading around 34 to 35 US dollars with a market capitalization of approximately $3.4 billion. Price to earnings ratio is not visible. Regarding the recent news, in March, Marathon announced that their Bitcoin mining fleet hit production of approximately 1.4 exahash per second, and that Marathon is going to produce Bitcoin that is fully AML and OFAC compliant by exclusively processing transactions that meet US regulatory standards. Marathon at a glance. Well, Marathon is a digital asset technology company that mines cryptocurrencies with a focus on the blockchain ecosystem and the generation of Bitcoin digital assets. They are located in Las Vegas in the United States. They have the potential to grow monthly revenue from $500,000 to $103 million approximately by the first quarter of 2020. On the one hand, Marathon is aggressively increasing mining power, which will increase the probability of earning Bitcoin, and on the other hand, they are significantly reducing Bitcoin production costs. Adoption for Bitcoin is accelerating. I also covered that in other videos that I did. For instance, Square, they invested $50 million in Bitcoin last October in 2020, and PayPal launched a new service allowing users to buy, hold, and sell cryptocurrencies. Marathon's growth strategy, they make a distinction between the theory and the practice. In theory, it's that you can improve Bitcoin production by increasing the hash rate, and 2, you can continue to de-risk the business by becoming more resilient to potential declines in the price of Bitcoin. This will result in an increase in output and also in a decrease in the costs of Bitcoin production. But in practice, this is different. They have an ambition. They have new miners increasing the Bitcoin production and revenue. In 2020, the company mined approximately 2 Bitcoins per day with an approximate revenue of $500,000 per month. They bought a lot of miners, which I will talk later about, and in the first quarter of 2020, they will mine about 55 to 60 Bitcoins per day, which will result in a revenue of $103 million per month. And the second thing is that they talk about a new facility with an opportunity to increase 12 times with a fixed cost of electricity. That will result in a more leveraged exposure to Bitcoin. Well, today they have 105 megawatts with a cost of 2.5 cents per kilowatt, and they have the potential to go over 500 megawatts with 2.5 cents per kilowatt. Yeah, let's talk about mining, the engine that fuels the Bitcoin ecosystem. They make a distinction between mining and also a miner. And mining is a system that adds to transactions and provides security to the Bitcoin blockchain, how new Bitcoins enter the market. And if you talk about a miner, that's a computer designed to solve a mathematical problem. And if you solve that problem, you get Bitcoin. How it works: Bitcoin transactions are pulled together in a block and encrypted by a complex puzzle. Then, once a block is formed, miners compete to solve the puzzle. And once this is solved, the transactions are verified by the network. And the new block of verified transactions is attached to a chain of prior blocks, hence the blockchain. For solving the puzzle, miners are rewarded with Bitcoin. And currently, there are 6.25 Bitcoin per block. And blocks are solved on average by every 10 minutes. The path to profitable mining. Marathon makes a distinction between what they can control and what they cannot control. What can a company control? Its hash rate, the cost of electricity, and their own corporate expenses. Well, what can Marathon not control? The network hash rate, the price of Bitcoin, because that's determined by the market, the block reward, and the number of blocks per year, and also the price of other miners. If you put everything into a formula, you can get Marathon's hash rate divided by the network hash rate, multiply the price of Bitcoin times 6.25, that's the block reward, times 52,560 blocks per year. Then you get the revenue. After that, you have to subtract the cost, which is the price of the miners, the cost of the electricity, and Marathon's corporate expenses. Here's an overview of history and expansion and growth. In the first quarter of 2020, they really began aggressively upgrading the mining portfolio with the next generation of miners. The company eliminated all long-term debt on the balance sheet. In the fourth quarter of 2020, the company announced to purchase 90,000 S19 miners, including Bitmain's largest order ever. And they have the ambition in the first quarter of 2020 that all 103,120 are deployed, making Marathon one of the largest miners in North America. Let's talk about the key competitive advantage of Marathon. Well, Marathon entered into a partnership with Beowulf Energy. That's a best-in-class energy generation company. They developed, constructed, and acquired and operated over 5 billion of power generation and industrial assets. They have a portfolio of 2.3 gigawatts of energy assets, and they own 6 million shares of Marathon itself. So they actually have a skin in the game. And what's the result of this partnership? Well, the electricity cost decreased to $0.028 per kilowatt per hour. The aggregate mining costs for electricity plus the data center management decreased 38% to $0.034 cents per kilowatt hour. And the average Bitcoin production cost right now for this company is approximately 4.5 K per Bitcoin. And Marathon right now, they own 100% of this data center. They retain 100% of the Bitcoin mining output, and they're also exploring opening renewable energy powered data center in the northeastern of the United States. Yeah, another competitive advantage is their priority access to the industry's premier miners. They have a partnership with Bitmain, and that's the premier supplier of the industry's most advanced ASIC miners. So you get a guaranteed priority access to the industry's top miners that decreases the risk of the supply constraint and creates a unique barrier to entry, and also a fixed cost to hedge against anticipated future price increases. I looked at the website and I found their order book and the deliveries for these miners, and you can see that here. What can you observe here? That mainly at the end of 2021 they get the largest deliveries. For instance, in December 2021 they are expected to get a delivery of 24,500 miners. Marathon is uniquely positioned for long-term success. They have two partnerships, one for Beowulf Energy and two Bitmain. Marathon has eliminated obstacles faced by most mining companies. For mining, that implies that scale is paramount and that access to capital is imperative. And as a public company structure that allows the ability to act opportunistically and scale effectively. Bitcoin's market participants never have been more long-term focused. As of November 2020, roughly 60% of Bitcoin's supply had not moved in more than 1 year, a testament to the market's long-term focus and a holder with strong conviction. You can also put that in a graph. On the x-axis we have time, and on the y-axis we have the share of Bitcoins outstanding. They divide this into 7 time frames. Purple is 1 day to 3 months. Green represents 3 to 6 months. Watermelon color represents 6 to 12 months. Yellow 1 year to 2 years. The teal color 2 to 3 years. The gray 3 to 5 years. And black represents more than 5 years. And you can also see that the percentage of Bitcoin supply held for more than 1 year is increasing, at the percentage of Bitcoin supply held for less than 1 year is decreasing. You can also call this a hodl wave, and hodl is a slang in the cryptocurrency community for holding the cryptocurrency rather than selling it. You see that insider trading is very limited for this company, because in this short overview you can observe 2019, 2020 and 2021. The thing that I want to mention here is that in the 6th of February 2021, the CEO, Merrick Okamoto, sold 15% of his stake in the company. We have 5 people representing the board of directors. The first and most important one is Merrick Okamoto. That's the CEO. He is also included in the management. And in the management we have 2 other people as well. Jim Crawford, which is the Chief Operating Officer, and Simeon Salzman, which is the CFO. Let's now listen to the CEO, Merrick Okamoto, talking about the mining pool.
We believe that, if you just look at the landscape of the mining pools, most of them in this that miners are pointing to are all domiciled in China. And if you look at what a Bitcoin mining operation does, we validate transactions on the blockchain. And many corporations now are moving their analog paper type systems and they're making them digital and moving them on a blockchain. As they move those onto a blockchain, they need validation for transactions to be proven and validated. And we get paid to do that with our miners. If you try to go it alone and just put all your miners on the network by yourself, you could win some validations and there might be days that you did not. So everybody comes together generally in mining operations and they pool together and choose a mining pool. All the mining pools, for the most part, the largest, say 5, are based in China. And it's our belief there's 2 issues with that. One is there's geopolitical risk. Having all of our machines pointed to China in a situation where we can't control the internet there, what the government may do there, we would like to onshore that. And we've talked to many other large enterprise miners, and they want to do the same. They want to point their miners to a pool in the United States. The second issue, and what I think is unique about our pool, is if you look at the rules, their OFAC rules from the U.S. Treasury says you should not do business with these parties. These are known sex traffickers. These are, maybe Hezbollah or terrorist organizations. And we can see, we take an API from the Treasury that shows us the wallets, who the end recipient is, and says it's illegal for you in the U.S. to do business with these parties. So we're a U.S. NASDAQ listed company. We want to follow the law. So we're creating a pool that looks at the process that we're going to mine a transaction, and we look at the end result, who the recipient wallet is. If it's on the OFAC restricted list, we skip it. So it doesn't mean that we're censoring that transaction. Someone else will mine it, just we won't. Marathon will not mine something that the recipient wallet is on a list that the Treasury says it's illegal for us to do business with. We believe that once we start creating these coins at the beginning of next month, and we're going to put them in a separate holding, separate blockchain for them to be held in, there will be institutions that want to buy that coin that is Virgin OFAC compliant to U.S. laws versus buying a regular Bitcoin. I think it'll trade at a premium over time. And there are institutions that just, their bylaws won't allow them to invest in something, and they're waiting to use some of their U.S. Treasury assets until something like this comes along. And if you read or just Google it, numerous articles have been written and a number of interviews in the last 2 or 3 weeks saying institutions that have not yet joined and purchased Bitcoin, that's the reason why. They're waiting for this clean OFAC type coin to become available, and we're going to provide it to them.
The financial highlights in one snapshot. They have 218.4 million in cash and cryptocurrencies. The cryptocurrencies exclude Marathon's 150 million investment Bitcoin, which they did at 15 March 2021, and that Bitcoin investment was valued at $271 million. The company is really on track to produce 55 to 60 Bitcoin per day. They are cash flow positive, they have minimum liabilities, and because of all these orders from Bitmain, they are improving mining margins with an average production cost right now of $4,541 per Bitcoin. Predictable revenue is driving profitability. Assuming a Bitcoin price of $60,000 and a difficulty rate as of March 2021, we can put this in a graph. On the x-axis we have time, and on the y-axis we have US dollar revenue. And there is one description: they expect hardcore growth with total revenue and gross profit increasing. Regarding the financials, if you look at the shares outstanding, they have 98.8 million shares outstanding, of which 7.6 million are allocated to insiders of this company, so they really have skin in the game. Regarding the total current assets, which are 286.4 million, if you look at the current liabilities, they have 1.4 million, so the current assets are well enough to cover the short-term liabilities of this company. And lastly, the opportunity and the risks. Well, I wrote several things down when I was analyzing this company. For the opportunity, you can own the largest self-mining Bitcoin operation in North America. Instead of owning the Bitcoin directly, you can directly buy the stock. They have a solid growth strategy with mining. The company has zero debt. They have a partnership with Beowulf Energy that will decrease the energy cost significantly. By the first quarter of 2022, Marathon expects to have an individual hash rate of almost 10.4 exahashes per second. If you look at the total hash rate in the network right now, it's approximately 166 exahash per second. From the macro point of view, Bitcoin continues to gain credibility. There seems to be an asset allocation adoption by institutions right now, and Bitcoin could play a pivotal role as corporate cash. On top of that, the firm keeps hoarding more Bitcoin. They purchased Bitcoin in the past, and they want to hold the Bitcoin that they mine. By ramping up this production, barriers to entry will increase over time, which is good for Marathon, and they have OFAC compliance for Mara, which might be a new catalyst for Bitcoin, allowing institutions to buy. Regarding the risks, the company has a lofty valuation. It's quite difficult for me to value this company because they're only focused on Bitcoin. The stock price performance is highly linked to the price of Bitcoin. So if Bitcoin is about to take a hit tomorrow, Marathon Digital Holdings stock price will take a hit as well. You have mining equipment obsolescence, with competitors like upgrading their mining equipment, new miners coming out. Marathon has to upgrade their mining fleet in the future as well. And as Bitcoin is very attractively priced at the moment and is expected to go up as well, you might question whether growth is sustainable because competitors may enter the market and that might increase competition. And the biggest risk for this company is anti-government regulation, which might be negative for the cryptocurrencies. And you can think about a ban or restriction on Bitcoin mining in several countries right now. Yeah, and at the moment I don't have this stock because I already own several other cryptocurrency companies such as PayPal, Square and Silvergate Capital. But if you want to buy, I totally leave that up to you. Thank you everyone for watching this video. I really hope you enjoyed it and see you on the next company.